They stopped me at my own gate, not a gate belonging to the HOA, not a gate on shared property. My gate on my land, at the entrance to the private driveway that led to the cabin I had purchased 8 weeks earlier with a warranty deed, a title insurance policy, and a closing statement that itemized every dollar of the transaction in the specific organized way that real estate closings itemize things when everyone believes the paperwork is in order. The guard was a young man, maybe 22, in a polo shirt with a Pinecrest Highlands logo on the chest and a clipboard that he was holding with the confidence of someone who has been given authority and has not yet learned that authority requires a foundation to stand on. He said, "Sir, this is private community property. Residents only beyond this point." I said, "I am a resident." He said, "I do not have you in the system." I said, "I purchased cabin 14 on Ridgeline Court 8 weeks ago." He said, "Cabin 14 is listed as HOA common property in our records." I looked at him. Then I looked at the gate. Then I looked at the warranty deed on my phone, which I had photographed before closing and kept in a folder I could access from anywhere, because I had learned long ago that documentation you cannot reach is documentation that does not help you when you need it. I said, "I have a recorded warranty deed showing my ownership of cabin 14. He said he would need to contact the HOA office before he could allow access. I said, "I am going to give you 5 minutes to make that call. Then I am going to drive through this gate because I own the property on the other side of it, and you do not have the authority to prevent me from accessing my own land." He made the call. I documented the time. What happened in the next 4 hours clarified a situation that the Pinecrest Highlands HOA had apparently been hopping, would clarify itself differently, which is to say in a way that did not require them to explain how they had been renting out a cabin they did not own for 3 years and depositing the rental income into an account that their financial statements did not reflect. My name is Soren Madsen. I am 49 years old. I am a certified fraud examiner. I find financial irregularities for a living. I have been doing it for 21 years. And when a 22-year-old guard in a polo shirt told me that my cabin was HOA common property, I did not get angry. I got curious. Because in my experience, when an organization claims to own something it does not own, it is rarely about the thing itself. It is almost always about the money the thing has been generating. Comment below where you are watching from. Because this story ends with a forensic accounting of 3 years of rental income, a board treasurer who resigned before the investigation concluded, a criminal referral that the county district attorney accepted within 48 hours of receiving my documentation package, and a cabin that is mine, has always been mine, and is now generating rental income into an account that I control. But it begins at a gate, with a young man and a clipboard, on a Saturday morning in September. Pinecrest Highlands is a mountain community in Garrett County, Maryland, built between 2004 and 2012, on terrain that the developer's materials described as the authentic Western Maryland mountain experience, and that delivered on that description in the specific way that mountain communities deliver on promises, which is to say completely in summer and fall, and with specific conditions attached from December through March, that the brochure photographs do not fully represent. The community consisted of 114 privately owned cabins and homes, common areas including a lake with a small beach and a boat dock, hiking trails, a community lodge, and a management office that operated year-round and handled everything from road maintenance to trash collection to the short-term rental program that many cabin owners participated in. I had purchased cabin 14 in July of the current year through a straightforward residential real estate transaction. The listing had been on a regional real estate website. The seller was an estate, specifically the estate of a woman named Miriam Holt who had owned the cabin since 2009 and who had died in February, leaving the property to her son, Douglas Holt, who lived in Arizona and had no interest in maintaining a Maryland mountain cabin and had listed it promptly. The purchase price was $412,000. I had done what buyers do. I had hired an inspector. I had reviewed the HOA documents that were provided, which included the covenants, the rules and regulations, the current year's budget, and the community map. I had obtained title insurance through a title company that had conducted a title search and found the deed chain clear. I had closed in July with a warranty deed that transferred ownership from the Miriam Holt estate to me, recorded at the Garrett County Land Records Office. Everything had been orderly and documented and apparently complete. The first indication that something was not as it appeared had been a letter that arrived at my home address in August, 3 weeks after closing, from the Pinecrest Highlands HOA Management Office. The letter was on HOA letterhead and was addressed to the owner of Cabin 14. It said that Cabin 14 was a community amenity property and that the HOA appreciated my interest in the property, but that any transaction purporting to convey ownership of community amenity properties was void as against the HOA's governing documents, which reserved certain cabins as common area elements, and that I should contact the HOA office to discuss the situation at my earliest convenience. I had read the letter 3 times. Then I had read the HOA governing documents I had received at closing 3 times. The governing documents contained a definition of common area that described maintained trails, the lake and beach, the community lodge, boat dock, and designated open space. No cabin was listed as common area in any document I had received. I had called the HOA office. The person who answered had taken my name and number and said the community manager would call me back. The community manager had not called back. I had called again the following week. The community manager, a woman named Diane Pruitt, had taken my call and said the matter was being reviewed by the board's attorney and that she would have an answer for me within 2 weeks. 6 weeks after receiving the letter, I had heard nothing further. I had driven to Garrett County on a Saturday morning in September to visit my cabin for the first time since closing, and had been stopped at the gate by a young man with a clipboard and a Pinecrest Highlands polo shirt. The 5 minutes I had given the guard for his call became 22 minutes, during which I documented the time, the guard's actions, and 2 other vehicles that were waved through the gate while I waited, both with Pinecrest Highlands parking permits visible on their dashboards. The call produced Diane Pruitt on the guard's radio, who asked to speak with me. I took the guard's radio. Diane said the HOA was asserting that Cabin 14 was a community amenity property and that my access was subject to HOA approval pending resolution of the ownership question. I said, Diane, I have a warranty deed recorded at Garrett County showing my ownership of this property. I also have a title insurance policy on which I have just noted I may need to file a claim if access to my property is being prevented by an organization asserting an interest that was not disclosed at closing. I want to discuss this today in person with whoever has authority to speak for the HOA board. She said, the board president is available this afternoon. I said, I will be there at 2. Then I drove through the gate, which the guard opened after the radio call, and drove to Cabin 14. The cabin was occupied. A family was on the porch. 2 adults and 3 children who looked at me with the specific expression of people who have rented a vacation property and have not expected the owner to appear unannounced. I apologized for interrupting their stay. I took photographs of the cabin exterior with the rental occupants visible on the porch, documented the time, and drove to the community lodge to wait for 2 o'clock. I called my real estate attorney from the parking lot. Her name was Christine Baum, and she had been practicing real estate law in Maryland for 20 years. I described what I had found. She said, Soren, Cabin 14 is being rented. I said yes. She said, by the HOA. I said apparently. She said, to guests who paid the HOA for the rental. I said that was the reasonable inference from what I was looking at. She said, the HOA has been collecting rental income from a cabin they do not own. I said, Christine, that is exactly what this looks like. She said, I will be there tomorrow morning. I said, bring the title insurance contact information. She said, already looking it up. The 2 o'clock meeting was in the community lodge, at a round table in the conference room that smelled like pine and the specific institutional coffee of organizations that buy their supplies in bulk. The board president was a man named Jeffrey Crane, 63, retired from a financial services career in Baltimore, who had the composed manner of someone who had been told a problem was coming and had prepared himself to address it without revealing how much he knew about its origins. The HOA's attorney, a man named Warren Silk, who had been retained that morning based on the speed of his appearance, was also at the table. I put my warranty deed on the table. I put my closing statement on the table. I put the title insurance policy on the table. I put the August letter from the HOA on the table. I said, I own cabin 14. I have a recorded warranty deed. I have title insurance. I drove to my cabin this morning and found it occupied by renters who appear to be there on a rental agreement with this HOA. I want to understand how a cabin I purchased 8 weeks ago is being rented by an organization that does not own it. Jeffrey said the HOA had a long-standing designation of certain cabins as community amenity properties that had been part of the original development plan. I said, that designation does not appear in any HOA document I received at closing. He said the documents were perhaps incomplete. I said the documents had been certified complete by the management office at the time of closing. Warren Silk said the ownership question was a legal matter that required careful analysis of the governing documents and the chain of title. I said I agreed, and that I had a real estate attorney arriving the following morning who would be prepared to conduct that analysis with the HOA's documentation. I said in the meantime I would like to know the rental income that Cabin 14 had generated in the current year and in prior years, the terms of the rental agreements that had been executed for the property, and the account into which rental income had been deposited. Jeffrey said that financial information was internal HOA records. I said it was financial information regarding a property I owned, and that I was entitled to it as the property owner. Warren Silk said the ownership was in dispute. I said the ownership was not in dispute. My deed was recorded. His client's assertion was not supported by any recorded instrument. The question was whether his client understood that and was prepared to act accordingly. I said I would expect the cabin to be vacant when I returned the following morning with my attorney. Then I left. Christine arrived at 8:30 the following morning. We met at the community lodge where Jeffrey Crane and Warren Silk were waiting, along with 2 other board members I had not met. The cabin had been vacated. The renters had been relocated by the HOA to a different unit overnight, which I noted as confirmation that the HOA controlled a rental inventory and that Cabin 14 had been part of it. Christine put 4 documents on the table: the recorded warranty deed, a certified copy of the Garrett County title search that had been conducted before closing, the title insurance commitment that had been issued, and a printed copy of the Pinecrest Highlands HOA governing documents, specifically the Common Area Definition section, which she had highlighted in 3 places. She said the HOA governing documents define common area as maintained trails, the lake and beach, the community lodge, boat dock, and designated open space as shown on the recorded community plat. She put the recorded community plat on the table. She said, Cabin 14 does not appear on this plat as designated open space or as any category of common area. Cabin 14 is identified on this plat as a privately owned residential unit. She said the HOA's assertion that Cabin 14 is a community amenity property is not supported by any recorded instrument, any provision of the governing documents as recorded, or any provision of the community plat as recorded. Warren Silk said the HOA had a board resolution designating certain properties as community amenities. Christine said a board resolution could not override a recorded deed or a recorded plat. Warren Silk said the resolution predated my purchase. Christine said a board resolution was not a recorded instrument affecting title, and that any instrument affecting title would have been found in the title search and would have been disclosed at closing, or would have been a basis for the title insurance to respond. Jeffrey Crane said quietly that the situation was more complicated than the documents suggested. Christine said she would appreciate him explaining the complication. Jeffrey looked at Warren Silk. Warren Silk looked at the table. Then Jeffrey said, Cabin 14 was owned by Miriam Holt. When Miriam died in February, the HOA management identified the cabin as potentially available and began renting it as a community amenity while the estate was being settled. I said, the HOA began renting a privately owned cabin while its owner's estate was being settled without notifying the estate or obtaining the estate's permission. Jeffrey said the HOA had believed the cabin was designated as a community amenity based on an arrangement Miriam had discussed with the previous board president. I said, what arrangement? Jeffrey said there had been an informal understanding that Miriam would leave the cabin to the community when she died. I said, did that informal understanding involve a recorded deed or any instrument affecting title? He said no. Christine said, Mr. Crane, an informal understanding is not a legal interest in property. The cabin passed to Douglas Holt through Miriam's estate. Douglas Holt sold it to my client. My client owns it with a recorded warranty deed and a title insurance policy. The HOA has been renting this property without authorization from any party with legal ownership since February. I said, I would like the rental income records for Cabin 14 from February through the present, the rental agreements that were executed during that period, and a full accounting of where that income was deposited. Warren Silk said he would need to consult with his client before producing financial records. Christine said she would accept that, and that if the records were not produced within 72 hours, she would file for a court order compelling their production. She said she was also notifying the title insurance company of the situation, and that the title insurer would have their own interests in the matter, given that they had issued a policy on a property the HOA was asserting a claim against. The title insurance notification was the action that produced the fastest response. Title insurance companies have specific legal teams for exactly this category of situation, situations where a claim is being made against a title they have insured, and those teams move quickly because their exposure is defined by the policy limit, which in this case was $412,000. The title insurer's attorney contacted Christine within 24 hours of her notification. He said the insurer was treating this as an active coverage matter and was prepared to defend my title against the HOA's assertion. He also said the insurer would be conducting its own investigation of how the HOA's claim had not appeared in the title search and whether there was any instrument they had missed or whether the HOA's claim was entirely unsupported by any recorded instrument. The investigation confirmed the latter. There was no recorded instrument. The HOA's assertion was based entirely on Jeffrey Crane's description of an informal understanding with a deceased woman who had left no written record of any such arrangement, and whose son, Douglas Holt, when contacted by Christine, said he had never heard of any arrangement regarding the cabin, and that his mother had made no mention of any intention to leave the property to the community. The rental income records, produced under the 72-hour deadline under threat of court order, were the document I had been most interested in seeing. I had been curious about the money since the guard at the gate told me Cabin 14 was HOA common property, because, in my experience as a certified fraud examiner, unauthorized claims of ownership are almost always about money. The records showed that Cabin 14 had generated $12,400 in rental income from February through September, 8 months of unauthorized rental during the period between Miriam Holt's death and my purchase and my subsequent visit. The income had been deposited into the HOA's operating account, which was the expected account for rental income from legitimate HOA rental properties, except that Cabin 14 was not a legitimate HOA rental property. The income from a property the HOA did not own had been deposited into the HOA's account without any disclosure in the HOA's financial statements of the nature of that income or the property it came from. I requested the full HOA financial statements for the current year. Christine obtained them through the board's statutory obligation to provide financial records to interested parties in the context of the dispute. I spent 2 evenings reviewing them. The financial statements showed rental income from community amenity cabins as a line item. The total rental income for the year to the point of the records was $89,400. The HOA had 8 cabins in its legitimate rental program, cabins that had been properly designated as HOA common area on the recorded plat, and that had been contributed to the HOA by their original owners through recorded instruments in the development's early years. 8 cabins generating $89,400 was $11,175 per cabin average. Cabin 14 had generated $12,400, slightly above average, consistent with the overall rental program. But Cabin 14 was not in the rental program. It was a private cabin the HOA had been renting without authority while its owner's estate was being administered, and then for 8 weeks after it had been sold to me. I requested the individual cabin rental income records. Christine obtained them through the same statutory mechanism. What I found when I matched individual cabin income to the 8 legitimate HOA rental cabins was that the 8 cabins accounted for $71,200 of the $89,400 total. $18,200 of rental income in the current year financial statements was not attributable to any of the 8 legitimate HOA rental cabins. Cabin 14 accounted for $12,400 of that. $5,800 of rental income in the current year was not attributable to Cabin 14 or to any legitimate HOA rental property. I looked at the prior year financial statements, which I obtained through a separate records request. The pattern held. Rental income consistently exceeded what the 8 legitimate cabins should have generated. The excess over 3 years was $41,000. $41,000 of rental income in 3 years that could not be attributed to any legitimate HOA rental property, and that had not been separately disclosed or explained in any financial document. I called Christine on a Thursday morning in October. I said, "Christine, I need to file a formal records request for the individual rental agreements for all HOA rental cabins for the past 3 years, not just the current year." She filed the request the same day. The records arrived 10 days later. I spent 3 days going through them. What I found was a third cabin, not Cabin 14. A different cabin, identified in the rental records as Cabin 31, which appeared in rental agreements going back 38 months as a community amenity cabin, generating income for the HOA. Cabin 31 was not on the list of 8 legitimate HOA rental cabins. I checked the recorded plat. Cabin 31 was identified as a privately owned residential unit. I checked the Garrett County land records. Cabin 31 was owned by a woman named Patricia Voss who had purchased it in 2018. I contacted Christine. She contacted Patricia Voss. Patricia Voss had been aware that the HOA was renting Cabin 31. She had been aware because she had a written agreement with the HOA's management office under which the HOA managed her cabin as a rental, collected the income, deducted management fees, and remitted the balance to her. Patricia Voss had been receiving quarterly payments from the HOA for the rental of Cabin 31. Those payments were not visible in the HOA's financial statements because they were categorized as management expense deductions against the rental income rather than as payments to a private cabin owner. The HOA had been operating Patricia Voss's cabin in a legitimate owner-managed rental arrangement and had been characterizing the income in its financial statements in a way that made it appear to be HOA rental income from a community amenity rather than income from a privately owned cabin managed for a fee. That accounting treatment meant that the HOA's rental income line was inflated by the gross income from Patricia's cabin, while the payments to Patricia were buried in the expense line. The net financial effect to the HOA was the management fee, which was legitimate. The financial statement presentation was not. I spent another 2 evenings with the financial statements looking at the expense categories. The management expense line for rental operations was 12% of gross rental income in the legitimate cabins. In the presentation that included Patricia Voss's cabin, the effective management rate was different. The difference over 3 years was $22,000 that had been characterized as management expense, but that I could not reconcile to any documented management activity beyond the fee Patricia was receiving. Christine and I met with the title insurer's attorney on a Tuesday in November. I laid out the full analysis. Cabin 14, unauthorized rental generating $12,400 in the current year. Cabin 31, Patricia Voss's private cabin, legitimately managed but disclosed in financial statements in a way that obscured the nature of the arrangement. $22,000 over 3 years in the management expense category that could not be reconciled. The title insurer's attorney said, "You are describing rental income mischaracterization and possible management fee irregularities." I said, "I am describing what the financial records show when you match them to the property records." He said, "Who was the HOA treasurer during this period?" I said, "A man named Robert Stein who had been treasurer for 4 years. I had checked the board composition records." Christine filed a complaint with the Maryland Attorney General's Consumer Protection Division the following Monday. The complaint was accompanied by my full analysis, 400 pages of financial records, rental agreements, property records, and the reconciliation work I had done matching income to properties and expenses to documented activities. The Attorney General's office assigned an investigator named Carol Payne, who called Christine within 48 hours. She said, "Your documentation is organized in a way that makes the analysis immediately verifiable." Christine said, "The complainant is a certified fraud examiner." Carol said, "That explains it. The investigation took 3 months. What Carol Payne and her team found confirmed and extended what I had found. The unauthorized rental of Cabin 14 had begun in March, 1 month after Miriam Holt's death, on the initiative of Robert Stein, who had been managing the community's rental program and had identified the vacancy as an opportunity. The rental income from Cabin 14 had been deposited into the HOA's rental income account correctly, but had been tracked separately in Robert Stein's management records in a way that allowed it to be extracted from the account in cash equivalents over the 8 months before my purchase, a total of $8,700, with the remaining $3,700 still in the account when Christine demanded the records. The $22,000 in unexplained management expense over 3 years was tracked through separate transactions to a personal account belonging to Robert Stein. He had been extracting management fees from the rental income in excess of what the HOA's policies authorized and depositing the excess into his personal account, while characterizing it in the financial statements as management expense. Total personal benefit to Robert Stein from the unauthorized rental income and the excess management fees over 3 years, $30,700. Robert Stein resigned from the HOA board in January, 2 days before the Attorney General's investigation formally identified him as a subject. His resignation letter cited personal reasons. The criminal referral was accepted by the Garrett County District Attorney on the same day it was submitted. Robert Stein was charged with theft by deception and misappropriation of funds in February. He pleaded guilty in April. Sentence, 24 months probation. Full restitution of $30,700, 200 hours community service, and a permanent bar from serving as a financial officer of any nonprofit, HOA, or community organization in Maryland. Jeffrey Crane was not charged. He had not known about Robert Stein's personal extractions and had genuinely believed the informal understanding with Miriam Holt created some legitimate basis for the HOA's rental of Cabin 14. His belief was wrong as a matter of law but was not criminal. He resigned from the board in February. The HOA settled my civil claim in March. The settlement covered the $12,400 in unauthorized rental income from cabin 14, plus legal fees, plus compensation for the 2 months of disrupted access while the ownership dispute was active, plus the title insurer's costs. Total settlement, $31,000. The title insurer's defense costs were covered separately by the HOA's insurance carrier. Patricia Voss received an improved cabin management agreement that accurately reflected the nature of the arrangement in the HOA's financial statements. The new agreement required quarterly accounting to Patricia showing gross income, management fees, and net payment, with a copy to the HOA's Financial Oversight Committee. The HOA implemented a comprehensive governance reform. All rental income by property, with the owner status of each property clearly documented. All management expense by category with supporting documentation. Any cabin identified for rental program inclusion required verification against the recorded plat and the land records before any rental agreement was executed. Financial statements required certification by an independent accountant annually. The board hired a property management company with professional licensing to replace the self-administered management function that Robert Stein had operated. I listed Cabin 14 in the HOA's legitimate rental program for the following season. The management agreement I signed accurately reflected my ownership and the HOA's management role. The rental income went to my account. The management fee went to the HOA. Everything correctly characterized in financial statements that showed what it was rather than what someone needed it to appear to be. The cabin is in the mountains in Garrett County. The leaves were changing when I drove up in October to see it for the first time as something other than a disputed property. The guard at the gate waved me through with a new resident parking permit I had been issued after the settlement. The cabin was empty. I walked through it for the first time without anyone else present. Miriam Holt had furnished it well. She had the instincts of someone who understood what people wanted from a mountain cabin, which is warmth and comfort, and the specific pleasure of being somewhere that looks intentional rather than assembled. She had owned the cabin for 13 years. She had enjoyed it. She had not intended it to become the center of a fraud examination and a criminal prosecution, and I thought about that while I stood on the porch looking at the ridge in the October light. She had intended for it to go somewhere useful when she was done with it. Her son had sold it. I had bought it. A guard in a polo shirt had told me I was trespassing. A 21-year career in finding financial irregularities had taken over from there. Hit the like button if you believe that a recorded warranty deed means what it says, and that an organization claiming to own property it does not own is almost always doing it because of what the property generates. Subscribe for more stories about property, documentation, and the specific curiosity that turns a gate confrontation into a forensic accounting. And if you have purchased property in a community where something does not quite match between what you were told and what the documents show, read the documents. All of them. The recorded ones. Because the recorded instruments are what holds, and the gap between what someone tells you and what the records show is where the interesting questions live.